Hey, how you doing? My name is Claude, and I am going to show you how I do trade setups. Um, and my strategy is based on bullish stocks, and what I do to pick those bullish stocks is I use my app here. It's my Pialo app. There are a lot of different um, like it picks the top 12 stocks from the S&P 500 and the Dow based on past performance, and then it ranks them in a portfolio allocation that is the best out of 1500 portfolio allocations, so you get the best one. But what I'm going to do is I'm going to show you what I do as far as like being able to pick the winners from the losers here. And so let's see, what I'm doing is I'm gonna, let's see, I'm looking at a normalization chart. The reason why the stocks have to be normalized when you compare them is because they have dissimilar prices. So you have to be able to normalize those stocks into one price so that you can compare them to see which ones are running and which ones or rising and which ones are falling, to compare them. So what I'm doing is I'm looking at, let's see, LDOS here, CF is here, and that those two are rising, but VLO is rising, and also um, Walgreens is rising also. So let's see, let's look at VLO. Let's look at that stock. So what I'm going to do is I am going to pull up this here, and you can see I was doing something with HON. Let's go VLO. Let's see what Valero Energy Corporation. Okay. Okay. So I see that. Oh man, that's my jam. That's my jam. All right. So if you don't know what my jam is, this is my jam. This is what I jam to. This is what I rock with. That's what I rock with right there. That's what I rock with. Okay. So, all right. So this is my jam right here, right? Higher high, higher high, higher low, higher low, right? Price breaks above the higher high, opens and closes above this resistance, and now it becomes support, right? If I'm going to enter in this trade, I'm going to enter in right there, right? Which is oh, that is awesome. That is awesome, man. That is a good trade. That is a good trade. This would be the best time to buy this stock. So all right, so what I'm gonna do is what I'm looking for is a break and close, open and close above resistance was what I got, and I'm looking like if it goes back below here, then I'm out of the trade. But if it goes above here, then I'm looking for 3 black crows. 1, 2, 3. Like if I get 1, 2, 3. Red means stop, I'm out, right? But this is a good classic trade just to buy. You know what I mean? So I can buy this, you know. So that's what I'm gonna do. I am going to trade. I'm gonna go here and I'm going to buy the stock. And go to the chart. My sell is 138, 137.52. So let's 137. $137.52. Okay. So I'm buying the stock here. If it goes below 137.52, go ahead and sell it on off. So that's my so that's what I'm giving them. So let's go ahead and what we'll do with this one, pretty much any of them that we trade, I'll make another video if it fails or if it works out, but we'll see. I'm gonna go ahead and send this to him and so for the best. Okay, so what I did was my stop is here, my limit here is here, so I'm in it. And so I'm in there and it's gonna go up, pop me in, and I think it's gonna go up. I'm looking for 3 red candles. 1, 2, 3. Well, if I get 2, if I get 1 candle, 2 candles, I'm out. I'm selling it. I'm gonna get my profit somewhere up in here somewhere. But if it does work out for us, then I'll be able to take it and add it to my bucket. But if it doesn't work out, then it is what it is. So we'll just we'll work with that. Okay. All right. So let's look at another one here. Let's get something else going. All right. So we just did something on what do we do? We just did something on VLO. And I'm gonna look at VLO2 again. I might end up doing something. With that. Okay, so alright, so what we got? Like Nvidia is a good one to look at, but then also Caterpillar is a good one. So household names, VLO is there, Walgreens, CF, IRM. Let's look at this IRM one, because I mean it hasn't been like really competitive, but it is definitely, it's interesting, you know. What's this one? That's Walgreens. Okay. IRM, plus the fact that I don't know what IRM is. Let's look at that. Let's look at IRM. So IRM. It won't let me copy it. IRM. So let's see. IRM. Let's look at IRM. I like it. I like it. All right, so this is why I like it. This is why I like it. It was in a downtrend, then it broke above it. Higher high, higher low, broke above that, and came back up. Then it kind of stayed in here, I guess. Now it's here. It hasn't really broke above this, but it's just depending on it's just trying to figure out what it wants to do now. And it's not exactly bullish right now. But if I was to bet for a place where it wouldn't go below, I definitely say it wouldn't go below this price here, which is 89.68. So like I would, and then the fact that it's just kind of the bears and the bulls are just kind of fighting over that mill, I think that I definitely would sell a put here. I'll sell one here at 89.94 because it's bullish. It's bullish, but it's in a range here. Yeah, we're gonna sell a put at 89. We're gonna sell a put at $90 for IRM. So IRM is Iron Mountain Incorporated New REIT. So it's I think it's a real estate stock. So we're gonna see what kind of price I can get on that $90 for sell a put. And so like when you're bullish on a stock, you buy a call, and when you bearish on the stock, you buy a put. So if you're completely bullish on the stock, you know that thing is going to shoot right through the roof. You buy a call, right? And if you bearish on the stock and you know the thing is going to go, and you're sure it's going to go through the floor, then you buy a put, right? So call is bearish, bullish, put is bearish, right? But let's say you're in between, you know it's bullish, you know that there's a place where it's not going to go down below, but you're not sure it's going to go through the roof. And you're bullish, but you're not exactly bullish. Then you sell a put. And if you sell a put, then you get paid if the stock doesn't go down below a certain point. So let's say the stock, you missed your chance to get in on the stock, but right now it's in a place where it's in another consolidation, but it's still a bias on it that it's still bullish, that it's not going to go back to where it was before when it was bearish, right? You sell a put at that point. So that's what I'm going to do. I am going, because say I was to get in the stock, this would have been the safest place to get into the stock. But since it's already past that point, I can sell a put and still take advantage of this and get paid as long as the time expires and the price doesn't go back below this point. If the time expires and it doesn't go back below this point, I get paid for the stock. So that's how put options work. And so we're going to see what kind of deal I can get on a put option. And we're going to go out 30 days here. And I'm going to find a put for a strike price around $90. And you can see here, the delta on that is 17%, which means that it's a 17% likelihood that it may hit my price, and then, but I doubt it will. I'm gonna go ahead and sell this. I mean, 17% likely that it'll be put, but yeah, I'm gonna go ahead and sell this put. I'm gonna sell a vertical. Bam. All right. So what I did was I'm selling the 90 and I'm buying it back at 89, and I'm gonna take it down to this to 1. Let's look at what that looks like. I'm gonna analyze that so you can see. All right. So this is what we're looking at here. Okay. So 90 is here. This. All right. So let's look at the chart here. We said 90 is here, right? This is 90, right? This is the price. Okay. 90 here. We'll go here to analyze. 90 is here, right? As long as the price is above 90, which is to the right of 90, I make money. If this time, like right now, like let's set this for today. Today is the 9th, right? The expiration on this this put option is the 8th of August. So every day we benefit from time decay. Every day that it doesn't go below 90, we benefit from time decay, which is theta, right? That's your Greeks. Theta is time decay. So we're here, right? And as long as it doesn't go below 91.42, that's my break even right here. 91.42 on the last day, right? If it's 92 or above, I'm gonna make something on this. I'm gonna make something, and the most I can make is $20. The most I can lose is $80, right? $85, and that's if the price goes below $90, which you go here to the trade. I mean, you go here to the chart. This is what the price is at, around 99. I think this is where it's going to stay between 90, 94 and 99, 100, maybe 94 and 99, 72. So I think it's definitely not going to go below 90, right? So let's say on the last day it's around 96.56. How much will I make? 96.56 is here, right? 96.56 is here. I make the full amount, 96.56. If it doesn't drop below 96.56 here, which is very, very highly and likely that the price is going to stay above here, it came down and rejected from there. So I think it might flag down, pop back up, because it wants to be bullish. It wants to be, you know. It may flag down and pop back up and break this. But I think it's less likely that it's gonna break below here. So what I'm gonna do is I'm gonna put this trade on. I'm gonna put this on. All right. And yeah, I'm gonna put this on. Well, let's see. Let's do 10. I just want to see how it works out with 10, what it looks like, and let's see what my price is gonna look like. Weekly option series with a non-standard expiration date. Still vertical. This simulated break even price 89.85. Max profit is $150. Max loss 850. I could do that with my real money. Buying power effect $850. So you need $850 to get into this trade. Credit cost. Go ahead and send it on. Okay. All right, and we'll do a video to see how it works out. But now these strategies work with bullish stocks, and this application allows you to get stocks that are in a bullish state. You know, it's an algorithm that runs. It takes 20 minutes for this thing to run, and it gives you a result, and you get 12 stocks that have beat the market and that are pretty much pushing up the index, S&P 500, and the Dow. You get the best performing stocks out of those. Then you're able to go in and do these strategies. But if you don't have a stock that's bullish, strategy is not going to work. And you see, like, I came here, I looked at these stocks here, and I just was like, okay, which one I think has the performance that might allow me to be able to put on this, take advantage of a bullish stock. And I picked IRM. IRM is here, right? It's above 1. And well, it's not above 1, but 1 is here. It's not above 1, but it is rising, and it's in the list. So I took that, came here, looked at the chart, and you see it was in a downtrend. It broke above the downtrend, and it's making higher highs and higher lows, which that's what a bullish stock does. It breaks out of a downtrend and reverses into an uptrend. So, and this, it could be two things. It may be a new uptrend, or it could be a reversal. It could be a retracement to go down, but it made my list. So my bias is that it's bullish. I could be wrong. But if you're interested in being able to have a tool that would allow you to not have to do the analysis to get bullish stocks, to do these bullish strategies, let me know, and we could take a look at getting you the tool. And if you're interested in this, I could definitely get this for you. But thanks for hanging out with me. Have a good day.